Hello everyone, thank you for watching this video. In today's video, we will be discussing the topic mortgages, specifically the two types of mortgages. We will be looking at the following: what is a repayment mortgage, the advantages and the disadvantages, what is an interest-only mortgage, the advantages and the disadvantages. Then we will look at the overall differences between a repayment mortgage and an interest-only mortgage. And finally, we will answer the question, can you switch from a repayment mortgage to an interest-only mortgage? Please continue to like, share, and subscribe to my YouTube channel for more videos. Types of mortgages. There are two types of mortgages: a repayment or capital mortgage or an interest-only mortgage. What is a repayment mortgage? A capital or a repayment mortgage is the most common type of mortgage being offered at the moment. With this type of mortgage, you'll make monthly repayments for an agreed period of time known as a term, until you've paid back both the capital and the interest. This means that the amount you owe will decrease every month, and as long as you keep up the repayments, your mortgage will be fully paid off at the end of the term. Having a fully paid off mortgage means you own your own home. You must also then decide the type of interest rate you want your repayment mortgage to be. You can choose to have an interest rate fixed over time or a variable, which means the interest rate can go up and down. The advantages and disadvantages of a repayment mortgage. The advantages: you will pay less interest. You may end up paying less interest overall because what you owe decreases every month. Later in your mortgage term, more of each payment goes towards clearing your balance and less towards the interest. You will have lower interest rates. As you pay off your mortgage, you may be eligible for lower interest rates as your outstanding loan has decreased. You will own your own home, and it's a faster option of paying off a mortgage. The security of owning your own home at the end of the mortgage term is one to look forward to. The disadvantage of an repayment mortgage is that your monthly payments will be higher than if you were to choose an interest-only mortgage. You can use an online mortgage calculator to work out how much your monthly payments are likely to be. But with a repayment mortgage, your repayment amount will be higher. Another type of mortgage is an interest-only mortgage. With this type of mortgage, you only pay the interest due on the amount you borrowed each month and repay the capital at the end of the mortgage term. However, very few interest-only mortgages are now offered. If they are, it is usually in special circumstances, such as buying a buy-to-let home or if you're applying for a mortgage in later life. This is because many people who were offered interest-only mortgages in the past had no means of paying back the capital at the end of the term. If you have an interest-only mortgage and can't repay the capital, you need to speak to your lender as soon as possible to discuss your options. The sooner you do this, the better it would be. Also, to fully own your property by the end of the mortgage term, you would need to repay the whole balance, including the capital and the interest. Let's look at the advantages and disadvantages of an interest-only mortgage. The advantages: lower monthly payments. as you are only paying back the interest on your loan. Greater control over your investments, meaning you can decide how you save to repay the capital of your mortgage. Disadvantages: longer time to pay interest. As the capital you owe isn't shrinking, you may have to continue paying interest on the full amount. Next, the total capital is still due. At the end of the mortgage term, you still owe the lender the initial amount you borrowed. So while you may be enjoying smaller monthly repayments, you'll need a plan in place for how you will pay back the capital. And finally, you do not own your own home after repayment of the interest. The capital amount still needs to be paid. Let us recap. What is the main difference between repayment and an interest-only mortgage? When you take out a mortgage, you will need to decide how you're going to repay it. With an interest-only mortgage, your monthly payments only cover the interest charged on your loan. With a repayment mortgage, your monthly payments are also used to pay back the initial sum you borrowed, so you pay both interest and capital on your loan. Let us answer the question: can you switch an interest only to a repayment mortgage? Guess the answer. Yes, you can. You can switch from an interest only to a repayment mortgage once your lender approves you for a repayment mortgage. Lenders carry out an approval process, as you will typically be moving to a much higher monthly payment. Options for switching to repayment mortgage from an interest mortgage varies from lender to lender. So you would need to shop around, see which lender offers the best packages for you to switch your mortgage, and you decide if you want to switch from a repayment to an interest only or an interest only to a repayment mortgage. The most popular option is always from an interest only to a repayment mortgage. We have come to the end of another video. Now, thank you for watching. Please like, share and subscribe for more videos.